If you're wondering where the real estate market's headed second quarter 2014, we may just have the answer. Eric, do we have the answer?
Here's hoping. We're going to give it a shot anyway. As you know, we're going to get the gut perspective. We're going to get the numbers perspective. We're going to see what's going on out there.
Well, what's going on?
Well, I think the most important part to understand is that we kind of have a middle section that's leading the recovery, right? And that's not necessarily the most healthy thing. The best.
What's the middle section? Help everyone understand.
Yeah, the best analogy I heard was, Mr. Chips. He's awesome, breaking down the facts and the figures. But think about a potbelly pig, right? They got a nice big midsection.
All right.
I don't think any of us are going to accuse a potbelly pig of being the most healthiest animal out there, right?
Interesting analogy.
Yeah, so that's what we got going on. That $300,000 to $700,000 range, which is kind of the move up buyer range in the greater Philadelphia area anyway. That's what's leading the recovery. That's where we're seeing low inventory. We're seeing a lot of frustration with buyers. I know I'm experiencing it myself personally, helping these folks out. It's like anything that comes on the market that's good, multiple bids and it fires off.
And what's happening with that first-time buyer market?
Well, I know you have some numbers maybe to get into that.
Well, I was waiting for you to give the answer, but I'll give you some numbers. Ultimately, he's talking about the inventory. At 3 months or less of inventory is the seller's market. Sellers are in control. 6 months or more of inventory, buyers are in control, somewhere at 3 to 6 months, more your average type market. So what we're finding, like you said, 300 to 700,000 is in that seller's market, 3 months or less of inventory. And then the buyer's market, it's not necessarily bad, it's in that normal range, the first-time buyer market. So that's what we're finding from a numbers perspective.
Yeah, and just to elaborate on that point a little bit, when you're in a recovery, you want to see kind of the foundation, right? The first-time home buyers are the foundation of our market. So you want to get a nice, solid foundation, see that market start to pick up, which then feeds into the move-up buyer, which then feeds into the million plus, and life's good. Right now, that middle section, that move-up buyer is what's there. And we know, part of the reason for that is not all of the ones that are moving up are able to sell. If you bought, at the height of the market and things, so there's a lot of reasons that go into it. We hear Old Man Winter, he wasn't easy on us, so a lot of people use that as a crutch too. But I think when you really break into the numbers, which is your specialty, you start to see maybe this recovery is not as good as we thought.
Well, we like to be more positive here. I think we're seeing a lot of good signs. It is a strong market, rates are still low, and we're seeing a lot of good things. So it's not as bad as you're saying.
Yeah, I'm over here saying don't buy a home, right? I get it. You're right. There's a lot of economies of scale out there, but I think it's important to just look at the numbers every now and again, and that's coming from the gut guy.